All right, everyone, it's time to begin our next panel, which is about how real time rails are redefining global payments. And for the same, I would request the moderator to kindly come on the stage, Miss Nisha Bachani, Managing Director and Partner at BCG. Let's have a huge round of applause for her. And now I would request speakers to join. Mr. Ambar Sur, founder and CEO at Terrapay. Mr. Karthik Ganapathy, co-founder at BillDesk. Mr. Roberto Valdovinos, CFO at People's Clearinghouse. And Mr. Shinichiro Nishikawa, Head of Global Payments and Services Division, NTT Data, Japan. I would request Ms. Nisha Bachani to kindly begin the session.
Thank you so much, and I'm personally very excited to hear the views on such an interesting topic from our esteemed panelists today. So I think we have seen a lot of transformation in payments, moving from cash to digital to instant payments, and cross-border payments is now, seen as the next one, which is going to really be a big growth driver and almost bring an uplift of about 10-12% on a 2 trillion revenue market. Let me start with you, Nishikawa. Yeah. What are your perspectives on what is going to really drive the revolution going forward? What will unlock this growth?
Yes. Thank you so much, Nisha. And I'm very happy to be a very good panelist here. So, in my experience in Japan, we provide the online system from the 50 years ago. Then, so that time, it's so many things happening in even the domestic transaction. But so many things to do. But nowadays, thanks to the advanced technology, also the utilizing AI, that we are much easier than before. But still, that we need to take not only the technology, but also some of the compliance rules that we need to make. But anyway, so this time, all transaction is more real time. Then before, the credit card world, we have some time gap. Any time is settlement, the repayment is also the time gap. But now the real-time payment, we need to take care more real-time base. So that's why, but still we have a very huge opportunity to expanding this real-time payment to more worldwide and cross-border. It's my thought about that, yeah.
Got it. And picking from there, you talked about it's not just the technology, but a lot more beyond. Let me bring you in, Amber. You have huge experience in building these rails, connecting, 100 plus countries and driving these cross-border payments. What have been your learnings, and what are the challenges that you see that need to be solved now?
Okay. Thank you, Nisha. Thank you, NPCI, for having us here. I mean, real-time payments is, evolved, and the definition of real-time or instant keeps changing. But what we've learned is several things. One is payments is about trust, right? It's the trust that I'm going to receive the money. And we are seeing alternate payments come up, and they need to match up to the trust. That's number one. Secondly, these systems need to be integrated. It's not like the railroad system where it connects to each other. The definition of payments differs across RTP systems, right? So a payment finality, whether sometimes it's like it's received at the switch, sometimes it's received at the bank account. You don't get the actual definitions right. And it's been so difficult mapping all these fields, like, what are the purpose codes, what are the use of funds, all of that. So that's been a challenge. And lastly, like I said, you cannot not talk about real-time payments without talking about stable coins in there. Of course, that's coming, but if we can offer the same kind of settlement, the same kind of timing the same kind of, with addition to the central bank norms, I think real-time payment systems, the time has come. We can definitely meet or beat the requirements of stablecoins at this point in time.
Got it. You've
Thanks.
touched on a couple of important points here. We'll come back to stablecoins in a bit. We'll talk about all the challenges on, interoperability. But let me bring you in, Roberto, from, your experience as one of the countries having large remittances. How do you think the user, expectations are really changing? And what's the value capture that is yet to be done? And what's the demand from the side of SMEs and individuals there?
Well, the question of cross-border payments and remittances is very important to Mexico, right? The project I represent here, People's Clearinghouse, is a platform that interconnects community banks, saving co-ops around Mexico in the goal of allowing them to receive remittances straight into accounts, right? The digitalization of the remittance and the cross-border processes. With the goal not only to do remittances fast and convenient and secure, that obviously is where we have to go, but going beyond, the goal is to build an ecosystem where these small community banks can then receive more capital in their ledgers, have more liquidity, so they can lend more to those communities. Because finally, it's those small entities and not the big fintechs who are going to be able to lend, at least the Mexican scenario, to those communities. If we build a national fintech, and there are some examples, it will not invest locally. It's not its market, it's not its purpose. So that's the whole ecosystem we're building. And in that respect, I would agree. Solutions like Terrapay are very important. I think maybe you should explain us more why it's so important in the global ecosystem today. But it also has to go, when we speak of trust for payments, all the way to the last mile for this to have the effect that we want it to have. I would make this as an initial remark.
Got it. And let's build on that thread of trust and, managing the entire complexity that, Ambar, you spoke about. Karthik, let me bring you in here. Given your experience in doing this in the Indian landscape, where do you see are the largest challenges as you think about going cross-border? And what would be some of the things that we would like from an infrastructure and ecosystem perspective to be built up to enable this to happen?
So primarily, at a very basic level, when you talk about payments, it's always 4 key vectors that typically any framework has to look at. There is speed, there is cost, there is the risk underlying the underlying transaction, and then there's the compliance aspect. Obviously, in the domestic side, India as a market has evolved leaps and bounds in terms of looking at all of these 4 vectors, in parallel. Compliance was always 100%. And then gradually, when we started, it used to be 7 days for a payment to get cleared. It used to be fully offline. And now we're talking about millions of payments happening like real-time instant. And then the settlement windows are reducing. Each year we find that the number of settlements keep increasing, and therefore merchants receive their monies faster. So I would, from a cross-border perspective, I would try to look at what we need is a pretty much similar kind of a cycle that goes in. You need more of instant payments. You need more reliability of that and the risk handling at a much better level so that people who are receiving money or who are sending money get the finality of that underlying transaction. And then all the things that Ambar spoke about, we'll speak about the interoperability much more. Yeah. There are significant number of challenges in terms of how different countries treat, different workflows, the data that they need, the assurances they are ready to give. So it's a fairly complex world out there.
So let's unpack that a little bit, and Ambar, I'm going to come back to you and ask you, what are some of the biggest opportunities that you think we should tap on there in terms of solving these challenges one by one so that we have a greater connected ecosystem that builds up?
What are the opportunities?
What challenges do you see which are the biggest ones to solve to unlock this opportunity?
I mean, the challenges are, like I said, technology is not the challenge, right? Yes, data is the challenge. KYC remains a challenge. I think the entire all of that can be redone, because how do, we onboard customers from different FIs, and sometimes you can't rely on that KYC. So then you're faced with sanctions lists and all of that. All of these present a huge challenge in delivering the payload, right? And there's all kinds of authorities need to get together. It's not as simple as a domestic payment, right? You're looking at all the sanctions lists and all that to deliver the transaction, and all of it needs to be done real time. Because when you look at real-time payments, it's largely smaller value payments. Nobody's sending $1 million real time. It's smaller value payments which are used for remittances and small SME payments. And when someone's sending $100, $1,000 across, that's almost his monthly savings, right? And therefore, that money is important to the family. That money is being used for essentials. That money is not being used to buy a new house. It's being used for food, for medicine, for school fees, all of that. And delivering that money real time while doing all the sanctions lists, checking, and the KYC is the biggest challenge. And we need to get together to define KYC fields, to define the sanction list fields that we are doing, and maybe some kind of like how credit rating agencies have a credit rating. Can we give our customers a credit rating across borders which allow us to trust that transaction when it goes through?
And if I may ask, who do you think, or how do you think we can get on a path there? Is it regional? Do you think there should be a global central hub? Is it multilateral? What do you think would be a best path to go in that direction?
Different organizations have tried different methods. It's not working. Every organization does it their own way. There are, SWIFT has one way of doing it, but Nexus is also looking at it. There are different standards coming up. I think at some point it will settle down to some common fields. We have the ISO fields coming up, but those are just mandates. Those are just directions. They're not mandates. How do you use that field is still not defined. A lot needs to be seen once ISO really comes out.
Got it. And Nishikawa, coming back to you, having seen a lot of advancements in the Japanese market, what do you think, are the learnings, and what breaks first? Is it bringing these rules? Is it the risk and compliance bit? Is it resiliency, or is it the economics and somebody willing to invest, time and effort and infrastructure to make it happen?
Yes. Yeah, so I mentioned about the credit card world. Can you imagine the Visa and MasterCard, the card schemes, how many years they have created the overall interoperability rules? Many years, right? Yeah. But so we are trying to more speed up to make some the rules. Yeah. So it is not easy, totally. Yeah. So that's why we need the discussion base now. The cross-border transaction, especially the retail base, is also from the government to government, the central bank to central bank, and also the commercial base is now running. Then so someone taking the all is not kind of this decade is not much, right? Before some of the big guy taking all data is there. But nowadays, all data is localized within the country, right? So that's why not easy to have the regional hub. The idea is good, but who is taking that? The all time is the happening something, right? So that's why this is by technology point of view, the kind of the blockchain base or something. It's so totally newly technology is needed for the kind of this cross-border transaction. Also, the more collaboration with the commercial base and the regulatory basis. It's both is so tightly discussion is needed. Otherwise, only technology that he mentioned, very easy. So, but the rules and compliance and KYC, and nowadays KYC, no more KYC, now the due diligence, right? So that's kind of the risk take, the thinking that by each country base is totally different. So that's why I recommended the more collaboration with commercial and central banks, governments, and also the fintech and the banks. Also, the banks can be themselves, but some of the good technology that coming from the fintech. So that's why, as NTT Data, we are in Japan, we are providing the switching services in over 40 years. So that portion is also kind of the one of the parts of the government we need to think. But so another the country we provide is also other fintech. So that we have the both sides. Then idea is coming from the both sides. Then so combined mix is needed for this big challenge for all. Is my thought.
Got it. And if I may push you a little further, Amber, given you have seen this across, if you were to name the top 3 things in terms of scheme rules or standardization needed from a regulatory or inter-country perspective, if you had to start this now, what would be those few things that you would point down to say these are the 3 that needs to be solved?
I just reset the whole thing because I don't think the rules we have are today not meant for P2P cross-border transfers. They're all meant for trade payments, mainly for large values, because that's what existed. Right now, the need is real-time, the need is small value, and there are payment instruments beyond just banks, right? If you look at it, you look at wallets. Wallets is dominating the payments methods today. In a way, I look at guys like Revolut, who have a banking license, but they're primarily a wallet. Yeah. Even UPI is driving the whole business of banking into being a wallet. And the payment rails now need to address those things, the ability to handle these small value transactions. If you look at what banks like to do high value, small volume transactions. They're not set to handle this. We need to take it to what telcos do, which is small value, high volume transactions, and that's really where the systems are going. He talked about data localization. That's a big challenge too. Can we start trusting each other's data localization? Because today when I do a transfer from A to B, I have to prove both sides. I'm working with a regulator who wants me to have the KYC ID copies of all transfers. That's really not set for today because I'm a hub. I'm not really an end user. And these are the challenges we face all the time. Regulatory is a big part of it. Many regulators have the foresight and they have allowed models like us to proceed. But many of them are still stuck in saying that, no, I want the passport copy, I want the Aadhaar copy. So that doesn't help too much.
Got it. Very interesting. And you touched upon a lot of different points. And, one of them is around how is the role of the larger financial institutions going to change in this entire play as, real-time, small ticket size payments is what's going to explode. So, Karthik, I'll bring you in here. As you look at the future in terms of how these payments are evolving, and Roberto also talked about the ecosystem and adding value to the ecosystem. What do you think is going to be the most value-adding part in this pie? And what role do you think will, the traditional banks start playing in this play as wallets and some of these, payment rails start getting created outside?
So, I'll backtrack one step behind and just add 2 additional perspectives to what the panelists have spoken about. I also think, and let's start with what Shin was saying, right? The Visas and the MasterCards of the world, they were over the years able to put out a standardized system for retail payment network. They started there and in a very effective way, they were able to get they were a corporate and therefore they had the resources. They had established models working in a country. They were able to replicate it easily. They also got the consent of the central bank in each of the countries they worked in, established rules that would work for the players that existed within the countries, and then gradually layered on top of that cross-border. To my mind, that's the best example of cross-border. They can still do it instantly. Really speaking, from a card to a card, you can transfer instantly. It's just then about rules which is where the second vector comes in, which is when it comes to cross-border, it always becomes a sovereign kind of decision. The central bank, the main government, they want to talk about all aspects like data localization, and Ambar did mention about KYC. Name itself is represented in so many hundred ways that you can never get a guarantee on whether the name match is valid or not, right? So these issues are just going to be all over the place. And then the third vector now that's again got introduced is multiple payment methods. All the countries want their local payment methods to be pushed out, their rails to be getting higher and higher importance. And therefore, to my mind, it's just not going to be, in today's fractured world, it is not going to be possible for a global standardized collaboration to ever come. It's just going to be corridor to corridor implementation. And maybe a few more corridors will come together and they'll maybe join. And we see in the last few months, it's even become geopolitical. It's no longer just commerce that needs to be enabled or, and therefore it has a lot of things to be getting addressed. So coming back to how some of these payment methods like wallets, etc. will emerge, I think they will be shaped by what the corridors demand. If you in a certain corridor, if you have a lot of mobile wallets that exist, or a lot of UPI handles that exist, then that becomes the predominant way to pay for customers when they go outside the country or for customers to receive the payment. And hence, frameworks that we lay out, the other aspects of whether it is KYC, attestation, or whether it is the API, or whether we want to make it instant, real-time, and then allow the receiving party to take decisions based on that and the additional data that has to travel, they all have to work on these rails. And that's the opportunity, because you want to add more and more value to something that's working rather than think de novo about something and try and reinvent the wheel.
Can I jump in on this? I mean, it's very interesting, the example of cards, right? We speak of real-time payments, cross-border payments, as if it was something new. Well, in fact, cards have been doing it very accurately for the last 20, 30, 40 years, you could say. However, it's under which basis that's being done. When you are a member of Visa, MasterCard, you have to have a settling account in the US, right? Because that's where things happen. And you have to have 4.3 times, or I mean, the accounts vary. So you have to have a lot of capital in a bank account in the US so that then your clients can go to other countries and settle. So what this is telling us, it has never been a question of technology. Technology is extremely important because of the implications for security, compliance, everything we can do with it, and data security most of all. However, it's not really a technological problem. It's a political problem. It's a financial structure problem. And what that takes us into is thinking, what should we do with this situation? And there's a point where I disagree a little bit with you. Because you're saying something true, but I don't like the conclusion. You're saying this will never be a standardized global or world-level solution. It will always be a matter of corridors. Of course, that's politics. But it would be wrong to phrase it in that way. So that's a fact, but that's not the principle or the mission that we have. We should all vouch for or aim, right, towards full interoperability. Because then politics will always intervene and make things more complicated, right? And that's where the first comments that you were doing are essential, right? Like, I don't know, the aggregation of processes should be thought from a global perspective, right? Aggregation, what does it mean? Effects, liquidity management, compliance, dispute management, establishment of fees, all those things can actually be aggregated so that it can be simplified, both for financial inclusion and for not leaving any corridor, any country beside. On the other hand, standardization. ISO 222 is not bad. It has its issues, but it's really an effort towards full standardization of cross-border payments. So I would say we have to aim for that. And
so I agree with you in that we have to hope for the best. But the point I'm basically making is that there are just so many vectors that it's just going to be impossible for all countries, all stakeholders to see eye to eye, and therefore the way it will evolve is corridors, and it'll probably, and it's all right. To my mind, it's all right. Like, for instance, there is no reason that a card is the mechanism that from India the payment goes to, let us say, Zimbabwe. It could well be that in Zimbabwe it has to be a mobile wallet where the money has to go in, and that's where I think fintechs and players can come in. So the stitching will happen there. The corridors can have their internal geopolitics and what they have to do. And the rules also are likely, and that's the heavy lifting the fintechs have to do.
So where does it start is the question, and Ambar, you have a point.
I love this discussion, you know. People disagree on what's the standard, whether it will be global or whether it should be global. No, it won't be global. And that's where aggregators like Terrapay step in, because people will never agree. And that's the reality today, is we have different payment rails. You know, you have the banking rails, you have the card rails, you have the small value real time or wallet rails. The two know how to talk to each other, sometimes don't want to talk to each other, geopolitics and all of that. And this is how things will evolve. We have regional setups, we're doing things in Japan, we're doing things in Mexico, we have Nexus trying to do over there. Will there ever be a global thing? We have Swift. Swift is doing its little bit and trying to evolve, but there needs, I think there will still be place for guys like us to aggregate the various disparate systems across the world to make them talk to each other. So thank you, Karthik, thank you. You just proved my business case. I hope some VCs are sitting over here. I'm going for my next round of funding soon.
Great. I think let's move ahead a little bit and talk about data, and that's another sensitive topic on data residency. How do you navigate the norms around different countries, and how do you ensure there is proper consent, security? You touched upon it briefly, Nishikawa. What do you think is the future there? Do you think there is enough clarity, and how do you think the path ahead there would look like?
Yeah. Well, so the data protection and the data localize, it's so used to be, they don't care about that. But nowadays, all people is taking a bit more seriously. So that's why this kind of data localization mechanism is so still ongoing, then never end. So that time is how to collaborate with domestic to regional and global. It's so the how we step up is also needed for that. Then this discussion is also, of course, that we don't give up, but not easy. So that's why we need more collaborate. Is also I requested. But anyway, so data is more important, and also not only the personal data information, then also the transaction data is also more important, right? Then the data can be make some money and some business. So that's why all the players trying to get the whole data. So, but I mentioned that before, nowadays it's totally known that all the stakeholders, consumers don't want. So that time is also how to leverage these services, more easy way, more frictionless services to the consumers with this program, this challenge. So that's why I don't have the clear answer. But I mentioned some of the technology can be help. Then each country localize the data, and so protect the data within the players. Then we can make like a corridor, then domestic to regional first, then regional, each regional network, make corridor. Then we have the global network. Yeah, it's my thought for that.
Got it. And Ambar, what are your views here? How have you solved this data problem?
It's difficult. Like you mentioned, there's a lot of data localization requirements. What really is data localization in the cross-border world, right? I mean, I'm sending money from the US to Mexico. I'm not allowed to keep US data in Mexico. I'm not allowed to keep Mexican data in the US. So it's a very, like Karthik said, a sovereign issue. People are fighting over it. It's not been solved. I think we need greater efforts there, because it is in a cross-border transaction, it's very different from in domestic, and you can't just export domestic rules into a cross-border world. There are efforts we've been doing in taking this using AI, non-deterministic models to produce deterministic results, which the regulator will then accept. But there are challenges, and all of us need to step up on it.
Got it. And as we look at economics, maybe Roberto, I'll bring you in here. There are costs to this remittance, right? And Ambar talked about small value becoming the next big thing. And how do we really think about managing these remittance costs in the landscape of making sure that the players involved are also actually, making money and being able to manage all of this complexity viably?
Well, I think the key element there is reducing unnecessary intermediary steps, hubs, right? As we're going towards more immediate transfer mechanisms that have and ensure the settlement process, it's always the effects, right? If you're settling 1 day later, it brings in a whole problem of calculating then the fees and so on. You know it perfectly. And then you have to have capital in every country where you're operating, so it becomes a massive operational problem. That involves lots of costs. So making things in real time also means that you can eliminate a series of costs, ideally, because it brings other complications. When there's no friction, well, fraud jumps in very, very easily, and that's another problem. So I would say that models that are implemented for the future should tend to eliminate as much as possible unnecessary intermediaries and processes that are there because they were always there. As we were speaking of cards, if you see the US to Mexico corridor, Mexico is not the largest recipient of remittances, that's India. However, that's the largest corridor in the world, US to Mexico, like single country to single country. So it's a massive thing. We're speaking about almost around 70 billion US dollars, right? And still, when you see the systems that are being implemented, they are very old. I mean, go take a look at what Western Union is doing, MoneyGram is doing. They're legacy systems. But it's always like in technology, if it works, don't touch it, right? Well, to go beyond, we need to touch things, or at least compete with them in a better way, and that's eliminating certain barriers and intermediaries, I think. I don't know if you agree.
I agree yes, I agree.
He wants to reduce your
intermediary costs we'll discuss later outside. But one thing he touched upon is working capital costs to make money available real time in destination countries, which means you need to have that money sitting there before you got that instruction. Yeah. Working capital costs is a huge item on my balance sheet, and really affects us. So real-time payments, if we can, in some cases, money takes 5 days to reach, right? And then, which means you're pre-funding for 5 days. If that's a good corridor, that means $100 million up front. Yeah. And those costs can add up. I mean, you're looking at one country. Now you look at 150 countries. That's a lot. But we have efforts coming in from SWIFT and some others to look at this, where we can bring down the time taken to deliver the money. And also, I touched upon stablecoins earlier. Some of these corridors are allowing us to use stablecoins officially. So we use that to bring down the cost of pre-funding and the cost of reducing that friction that you talked about.
Got it. And Karthik, from your experience, when we look at the non-transaction side of revenues, what do you think will drive the next wave of growth there? Because that has to now become a bigger component in the pie, and it seems to be growing slower.
Yeah, so this is as technology evolves, as more competitors come in, as different kinds of players come in, this gets bandied as the only mantra to, so to speak, reach the end goal, that there's no money out of the payment, so what are additional things that can get done? What kind of value-add services that can be done, and so on. But while I'll answer that, but I do still think that, particularly on the cross-border side, there is still a lot of ground that can get covered by reducing the cost not of the intermediary, but of all the steps that it takes. So like Ambar was mentioning, if from 5 days you can collapse it to 1 day, the client is, I'm sure, willing to pay more. And the client can make real-time decisions. Similarly, use AI, better screening methods, faster ways to determine if there's a risk in the transaction or not. Those will help make it both instant, real-time, and the low-ticket, high-volume payments can go fairly immediately, and they can connect quickly, like the $1,000 that the Mexican is sending to, let's say, in India or wherever. Additionally, I think the next level that one has to look at is specific use cases. So if, for instance, stablecoin or a CBDC can reduce settlement risk, then apply it to a specific industry use case, bring in programmable payments, help that particular community get a better definitiveness on both the finality of the payment and the less settlement risk, so that then they can deliver the services instantly. So more and more, if we enable that, reduce the reconciliation effort, for instance, in some case, because most of these clients, particularly the B2B or the business-to-business kind of clients, even if they get the money, unless their systems are fully reconciled, unless they have full visibility end-to-end for all the documents that have to be got, unless the risk approvals are done, they can't use it. So the opportunities lie in those places. If we can simplify, we can layer more data into it. The data-led issues will continue to be there, but I think those are things that would help the next level.
Got it. Coming back to stablecoins, we've talked about it, and there are very, very polarized views on whether it's going to continue, whether it's fad. I'll start with you, Nishikawa, on it. What do you think about the future there? Is that the next big thing in cross-border?
Yes. So today, we have discussed the many challenges there, but so things happening every day. Then yesterday we announced the UPI that coming to Japan. So that time, we have a play as a player. So, but the one by one is also from the step one. Then we make the more the region domestic to regional first. So that's why we are trying to not only the India, Japan, India, some other countries, and Japan and some other countries. Now we are trying to get some kind of the step one. So otherwise, what is great, what is wrong, so we don't know. So that is my basic ideas. So that's why, but anyway, many, very huge opportunity there. Then we still have many challenges. Also, he mentioned is still the legacy system in the market. So that's why last 1 mile that we still rely on the legacy system, right? But legacy system that cannot be changed to newly one day. So this also the take time long. So then we following the changing the slightly. Then that time is so we need take some the new rule, new set the compliance. Then we make more big volume the worldwide. Especially in ASEAN regions, it's also evolutionary. The payment is totally different in US, Japan. So that's why this advantage that we should take more chance. So that is my thought, and I'm also very exciting today, and also very thank you so much.
Yeah. But there are macro and systemic risks there, right? So Ambar, I'll bring you in on your perspectives on this.
Stablecoins are nice, but it's a regulatory issue. Until the regulators allow it, most of us can't use it. Some countries are allowing it, and we use those. But I think our TP systems, if we roll them out correctly, will be able to solve the problems that stablecoin is trying to solve today. So I don't. Is there a future? There are niche futures. There are niche applications, but till the regulatory environment actually allows us to do this, real-time payments systems will actually fill that niche.
Got it. And to you, Karthik and Roberto, last question around AI, and no conversation is complete till we talk about the implication of AI. So where do you see AI playing a big role here?
So I think in general, there is always layered risk management, compliance assessment, KYC attestation, right? So AI will play a big role in all the supplemental sub-processes that go into actually enabling the entire payment. Clearly, the objectives that we have from a framework perspective is that we want it instant, we want it lowest cost, we want it 100% compliant and lowest risk. So that being the objective, these AI, let's say, snippets will essentially help us get more finality on each of them, right? That's, I think, the primary place where AI can play a role.
Okay, that's a big subject. We cannot discuss it in 40 seconds, but I would say just one thing. One of the biggest problems that can be humanly solved, but it's very complex, is the question of compliance, right? Yeah. Because you have such a different jurisdiction and the control of norms concerning AML and even, well, KYC obviously, in every country and in every region. By using AI, it's a simple use, but a very powerful use, we can now, instead of requiring hundreds of teams specialized in every country, we can actually synthesize and go for a standardized model of compliance that would probably make life easier for my friend here. Isn't it? I think that's one comment to make.
Great. We can open the questions for the audience. Any questions in the audience? Yes.
So my question was, we heard that in the cross-border payments, KYC is one of the challenge. And we understand that each entity residing in that region or in that country is responsible for that verification. And we also have heard that there are trust layer which can be built on technologies like blockchain and any other such stuff. So is there any development on that front to bring that trust between these entities for maybe the cross-border payments as well? And if yes, which are those?
Amber, you want to take that?
On the KYC part, I don't think there is any effort being made to introduce a trust layer on saying that the KYC that the bank has at that side is validated. You just trust that the bank has given you a transfer from an account which has been adequately KYC'd and you receive the money till somebody starts questioning you on it. So I have not seen anything happening like that, and that's part of the challenges because this whole thing works on trust. The fact that you have said he's KYC'd and therefore I have to receive it, and it works unless you look at sanction screening over there. Anyway.
Any other questions? Yeah. I think we can pass on the mic at the back there. Back there.
Where?
Left
Can
side.
you raise your hand, please?
Yeah.
Oh, okay, there.
Specifically on the AI front, which we discussed at the last, right? So AI currently being a non-deterministic kind of an approach right now, and payments being absolutely deterministic. How do you believe, or rather, why do you believe that the current LLM models, which are actually fundamentally prone to hallucination, prone to non-deterministic outcome, can get married to payments, which is supposed to be absolutely deterministic?
So I'll take a shot at that, and then after that, so you're right, which is the reason why I firmly believe that in the core workflow, AI cannot play a role, which is just deterministic. So whether it's a CBDC kind of a payment, which is a smart contract, which just determines if A and B then do this, those have to be deterministic, and AI won't help. Where it's definitely going to help is it'll do the analysis part very quickly, like what Roberto was mentioning. And then for all use cases where there is a human in the loop who has to do the screening, or the number of cases that come up for exceptions, or the identification of false positives, right? That part AI can bring down significantly. And you can have a much higher degree of reliance on the AI tool. We learn, of course. AI could decide that the risk is, say, out of 10, 7, which is high, but it's not really the case. Then you kind of introduce the learning into it and make sure that those cases come down. So it's going to be a learning process.
I'll just add something very, very quickly. You can perfectly use an LM model to do a probabilistic approach, right? So when you're doing a risk analysis, it's a very powerful tool. It's not deciding. The transfer has many elements. The risk calculation is where it would essentially be useful. But there's one caveat, and that's an important one. We tend to think of AI as something making complex processes simple for us humans. So we could say we can have the most complex and disturbing compliance mechanism distributed around the world with a myriad of models, which is what happens right now. It could be even worse, believe me. And we can say, well, it's fine. AI can read them and do the analysis for us. That would be a very stupid approach because it's becoming unhuman to a point where no one can actually do the full analysis and we become entirely dependent from machines. We still need to vouch, once again, for standardization, for simplification of processes as much as possible. And AI should be helping in that process, of course, as a tool, but it's not replacing our model because otherwise we're just going towards more complexity. And 20 years from now, it will be a labyrinth where we will not be able to discuss. We will have bots here discussing this subject. So, just.
Great. I think a lot of interesting takeaways for me. It's not just about technology, a lot of work on the scheme rules, data, cost, removing inefficiencies, and of course a lot of market value out there. One takeaway I would like each of you to talk about in terms of what's the future here, and starting with you, Karthik.
So I think future is clearly identify opportunities that can help reduce the lag in the payment settlement, and then enable clients to use the reduced time to make instant decisions so that they can then deliver value to their customers.
Great. Ambar?
I think the future of real-time systems is wallets. India has a different version of it in terms of UPI, but other countries have which is a very perfect version. But other countries have different versions too. The definition of wallets changes, but I think we're underestimating the power of wallets and the power of wallets being able to interoperate.
Interesting. Roberto?
I just say that real-time cross-border payments are something that is becoming natural by itself. Just like 10 years ago, UPI digital payments would have been a crazy idea, right? And all of a sudden they are mainstream normal. That's going to happen with real-time cross-border payments for simple payments, for B2B payments, for all sorts. It is already the case, but there's friction still. That will disappear eventually because it will become more normalized. And we should take advantage of that trend to make the best of it. Some companies, Terrapay and the Nexus project also, are public, central bank, private projects that are making the most of it. But it's an incredible area of opportunity for all those in this room, from financial inclusion to new technologies.
Yeah. I've mentioned the Asian payment evolution is a totally different. We start from the real-time payments. So this advantage, we should lead the global real-time payments by the Asian countries. Okay?
Great, great. Thank you so much. Thank you so much, everyone.
Thank you so much for an amazing session, and I would request you to kindly rise for a group picture, a quick group picture before we move ahead.